Mm-hmm. 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 Surprise, traders. How are we doing, guys? God bless each and every single one of you guys. We're going to be talking about stock ticker AMC as well as GameStop and the broader market. But before we jump into it, guys, I just want to say thank you for the 17, almost 1,800 subscribers. And if you guys are new to the channel, we talk about AMC, Neo, GameStop, and the broader IWM basket of stocks. So if you guys enjoy that kind of content, right, you want to see the deep dive due diligence into the charts and the news for the 2, 3, 4 stocks, whatever it is that we cover, make sure to slap the like button, hit the subscribe button to help the algorithm find us better. But starting off with AMC here, guys, and you can see you've done a beautiful close on the daily time frame. You get so freaking close to getting a daily bullish engulfing candlestick, but you failed. The biggest thing, though, here on the daily time frame is you closed above the most important technical resistance on the stock's history, and that is the 200-day EMA, traders. You closed, currently at 196, and the 200-day EMA currently sits at 193. So what I expect to happen, traders, is if you can hold these levels, and that's the most important thing to preface this here, is if you can hold these levels. This is the most important battle you've had on this stock all the way since, I would say, 801, right? No joke intended. Holding above the 200-day EMA here allows for the 9-day to catch up. This is a red lagging indicator. And once the 9 crosses to the 200, you should see that next leg of price action begin to make those boom boom candles higher that we want to freaking see, guys. On the weekly time frame, in case you guys are wondering why you rejected where you rejected, well, it's very clear here. You could see a very almost pitch perfect rejection off the 50-day EMA at 218. The high here was 221. However, right, you saw this big boom through this longer term consolidation or resistance here all the way back from 2023, right? During that AMC APE conversion, you saw reject, and then finally you saw that power through on AMC, and you got the volume that you wanted to see so far this week. We talked about the volume trend being exhausted, and for you to either get a big break to the upside or the downside, and you're seeing that on the freaking price in a beautiful, freaking magnificent way, just genuinely. So what I expect to happen here on AMC is you're trading within this 4-hour kind of channel, right? Bull channel, and you have the 4-hour MACD going in your direction. If you could take a little peeky weeky outside of this resistance here, currently at $2, not surprising, right? The more you zoom out, you see that your previous all-time low was sitting right around 204. So drawing that horizontal trend line is going to be important, because if you can break above that, traders, which is pretty much exactly where you rejected today, very close. If you can break above that, that's going to act as significant bullish momentum, and you should see that next leg continue on the short term. Let's see, short term leg higher leads to about 251, right? But we're here for the long term, the macro on the charts. As we know, the freaking macros never looked better on AMC except for 2021, right? 2021, February 1st to be exact. That's when you saw your first ever positive golden cross on AMC's history. For the EMA, in case you guys are new or maybe you haven't heard that phrase before, it is going to be the 50 EMA crossing above the 200-day EMA. That provides one of the strongest technical indicators in the entire market, because not only do us, right, retail apes, we watch that and we say it's going higher, right? But also hedge funds, institutions, day traders, banks even watch that trading technical breakout. And not just that, right? Now you're talking about AI and trading bots also watching for that to cross. So the 9 crossing through the 200 will be your first step, in my opinion, because that will likely lead to higher prices above the 200, which will likely cause the daily 50 to curl at a higher momentum rate. If that happens, all good things spiral in our directions, apes, and we see this thing go ballistic. And I really mean that, because the profit target from this breakout, as we talked about previously, is not a small one. It's pretty ginormous. So let's see. Where was that breakout exactly? Right there. So that theoretically takes you up to about that 3 to 318 extension. I'd like to think that you go all the way up to this horizontal resistance, currently sitting at 318. That's why we said 318. But there is a sign, a particularly bad sign on AMC, even though you had a freaking outstanding close today. There's a bad sign on AMC that I want to let you guys know, and I wouldn't be doing proper due diligence unless I told you guys, because we are just so, I would say, unfiltered here. I'm here to give you guys the honest to God truth, and the honest to God truth is you've put in one touch of bearish divergence here on the RSI. Now, that is not the end of the stock. In fact, you can make multiple touches. It could invalidate the bearish, the hidden bearish divergence, or the bearish divergence, right? A good example of this is GameStop, right? So you made one touch where you made a higher high on the stock price, but a lower low on the or a lower high on the RSI. You then made another higher high on the stock price and an equal low on the RSI. Well, that, my friends, is 2 touches of bearish div. And what happened to the stock? Right? That's when you saw that $27 slide all the way down to $20. That's no small slide. We'll take the measurements. That's about a 21% sell-off. Nobody wants to see that happen. And so that's why I say, right, do your own due diligence. It's very possible that AMC continues to consolidate above your previous high here, which is bullish, right? That's your previous high of 194. Stay above 194. All things look bullish. The moment you lose that, you're going down to 175. If you lose 175, guys, you lose the momentum, right? But currently, knock on wood, all things are still looking phenomenal for AMC. Let's see. And this could become more of a rising wedge. I would not like to see that, but that is possible, right? What else on AMC? We'll get into GameStop in just 1 second. We talked about the 4-hour MACD looking freaking scrumptious. We can talk about the weekly time frame, still looking great. Volume breakout, a technical inverted bullish hammer candlestick, and let's see, monthly time frame is a beautiful, beautiful thing. As you can almost see, your 3rd green month in a row, traders. The only thing, and this is going to be determined in June, is are you going to see a 3 bars down in volume? We will see. I doubt it, based off of how strong June has started already. That's something to watch going into the end of the month that we'll be covering here on this channel. And the quarterly time frame, guys, this is the most exciting thing about this chart right now, besides for the 200-day EMA. I know we said that already. But on the quarterly time frame, traders, look at what you got. So you have this, of course, it's terrible. Nobody wants to see that on the chart. Nobody wants to see that on the chart. But I would say the lessons that were learned through this down-sloping selling pressure are a lot more valuable than the shares that we held. But now that we're down here at $1.96, people have corrected their share price or costs, right? You look at the share price currently, and you look at what the candlestick on the quarterly time frame is doing. Traders, that's a bullish engulfing on one of the most macro time frames that you have. As well as that is you can see how close the quarterly MACD is to crossing, guys, a macro flip on the macro chart. You look at 2021, something very similar happened here, and it needs to be studied, right? You're starting to see a lot of different but similar things play out in the market, and this is just another example of that. You had a quarterly MACD cross on March 31st of 2021. You saw 100% quarter, 381% quarter, and then the 455% quarter following up that. You're currently up 100%, right? And this thing could go absolutely parabolic. You could break your all-time resistance on AMC that currently sits right around 80 today, right? And it's ever so sloping as time goes by. You can continue to trade within this very, very large scale falling wedge, which isn't still intact, right? So the easier you can break this from getting these kind of technical breakouts, the easier it's going to be for this thing to smash back above $10. Because as soon as you break above that 318 threshold that we talked about, guys, $7 and then $10 is on the table for the taking. And I say that because that's your next two stops on the way to your previous all-time low made all the way back in 2021. But one thing is for sure, traders, if you can get back above $10, this thing can freaking fly, right? This thing has a lot of room to cruise because of this candle right here on the quarterly time frame, down 80%. When you see these huge candles, just as easy as price came back up here, it can so easily come all the way back down. And that goes in both directions, traders. If you came down so easy, just as easily can it go back up. A great example of that, Carvana. Also, great example of that, GameStop, right? GME. Looking at the charts, this freaking parabolic slide up and then just maniacal from $120 all the way down to $9. But where you're at today, traders, posting the most profitable and impressive earnings that the company's ever seen, share buybacks, and potential acquisition of eBay. As you see, the chart has developed a bullish pennant or a flag pattern on GME. Now, not a lot of channels are talking about this, but I think it's valid to talk about currently. If you can see a break above the stock price of 25 schmeckles, $25, right? What you're going to see on this thing are freaking fireworks, in my opinion, not financial advice, right? You have a very clear rising support line and a very evident decreasing resistance. That, my friends, makes a flag formation, which you would take the profit extension from the previous run. That previous run was 9 up to 60, and that on current resistance levels would lead you upwards of $115 or pretty much double top at the previous all-time high. I really, really like GameStop at these levels, and I think the more you look into things like the daily chart, right, even though you probably have short-term downside on the daily chart because of this crazy test of this death cross, right? We talked about the fact that you're getting a death cross on GameStop. This was our last technical update on GME. You can watch back and see, but our technical update was you're getting a death cross on GameStop, and it's likely that you come and test that before seeing further price action to the upside. And you did exactly that, right? You saw a little bit of a falling wedge formation here. Very strange, but it was there. And from that formation, you saw, draw that a little bit tighter. Whoop. From that formation, you saw a breakout and a gap up during earnings going all the way from 2090 up to 2370. Some pretty crazy volatility there, even so that you got a daily MACD cross, traders. But I do not expect this to hold based off of your rejection here off the 200 and your daily, what is that candle? Shooting star candle. To me, one of the most ugly candlestick formations you can get, right? That's an example right there. Shooting star candle, test off the 200, and you capitulate from 24 all the way down to 20. I expect a very similar thing to happen here just to fill the gap. I'm not bearish. I would never call myself bearish on this stock. But short-term downside is what it's looking like on GME to fill this freaking gap. And then once you do that and you make either a touch of bullish div or whatever you got to do to make this double bottom and to fill this gap, I'm going to long the ever-living crud out of GME because it's never been more apparent that this thing is going to fly sky high. And now that you've already gotten that death cross test out of the freaking way, I think it's very likely that you build up a bull case here to potentially invalidate this for what it feels like the 17th time, right? You look at this thing, death cross, golden cross, death cross, golden cross, death cross, death cross, golden cross. So you can just see how good of an indicator this is when it follows through and you see those explosive moves on GameStop. This was a textbook example, right? 60% day on GME as soon as you saw the golden cross. You rejected 64, came all the way back down for a retest, and then went at it again, right? We ran it back all the way up to $50. You have a unique opportunity here if you could see this thing bounce and break this freaking pennant. This is 2 years of consolidation, traders, in which I can only imagine, I haven't looked, but I imagine the Bollinger Bands are freaking squeezing. And they are, right? Look at your daily Bollinger Bands. It is kind of bullish that you're closing right on top of the middle band there, but I expect you to come down and test the bottom. And when you do, traders, that is going to be a freaking unique opportunity on this stock. On the monthly time frame, squeezing on the monthly time frame, which I love to see, right? This is a good example. Bollinger Band squeeze in the monthly and expansion. I want to see these bands expand. In case you guys are new, we talked about the Bollinger Bands a decent amount. Bollinger Bands are created by John Bollinger. He's still alive if you want to follow him on Twitter. He's a maniac. But they pretty much just predict volatility. So it does not predict up or down, but it does predict when these dry spells come to an end. And so often on GameStop, do they go down? But sometimes they go up. So that's what we're trying to predict here. On the weekly time frame, seeing the volume exhaustion come to an end as you see earnings come in and you broke out of this falling wedge, still broken out of it, right? So possible to still close this higher, but it's likely that you close this at a low. 4-hour chart. Have a little bit of a pennant here. Or a flag. A little bit. So that is potential if GameStop can hold above that to see this breakout continue. And that would be your most bullish case scenario on the GME short term is a ride back up to 25.60. That is the best case scenario for GameStop right now. Looking at GameStop on TradingView, the daily time frame does kind of show you a little bit better. The volume that came in during earnings as GameStop stock jumps on record profit, $2 billion. Buyback approval. That's insane. Earnings, 87% surprise is insane in earnings. Revenue up 9%. Huh. That is insane. I mean, yeah, that's a pretty clear flag there. And kind of what I want to cover on GameStop as well is you look at this 2-year consolidation. You're coming to an end sometime between November and now. There was a very similar opportunity on GameStop that no one talked about, but we did chart this back in the day. And this was a falling wedge, a 4-year falling wedge, 3-year falling wedge on GameStop's chart. And probably just me and Jackie Lette. You know who it is. Only in Paradise knows. Great trader. Not going to say his full name. Talked about this falling wedge. And you saw what became of it, right? From the breakout, you saw a pretty gnarly increase of 600%. Now you have the opportunity to run it back, right? And regardless if you break out of this longer term new resistance that you've made from the two tops, that sits right around $45 to $43, I do think you're going to see this beautiful move. I really, really do. One thing that is a positive sign for GameStop is you've still yet to fill your $30 gap on the daily time frame. Currently sitting at $29.66, as well as your all-time gap on GME, which does get me excited and very, very jacked to the you-know-what. At 72, what's the exact? 72.88 is the exact gap left here in June of 2021. That will fill at some point, in my belief. Just don't know when. So not financial advice. That is my coverage on GME. I think it looks phenomenal. I think anyone that is hating on this stock does not know their due diligence. Let's talk about the GME warrants and then IWM. Let's see. So the GME warrants, seeing a double bottom from the area that we talked about in our previous video, and a technical test of that very important resistance and support at pretty much the exact same time, right? So it's pretty interesting to see you do that on the shorter time frame. Let's look at the daily though, and let's just see. Daily time frame looking pretty bullish and bearish at the same time, honestly. You saw a rejection of this longer term macro support right there on that inverted bullish hammer candle. You saw a rejection of the 200-day EMA, and you saw a rejection during the earnings of this macro resistance line. So a lot of rejection here on the short-term time frame, but there is one good thing about that, right? Your candle close was bullish, and the more tests of resistance that you have, the more likely you're to break out of them. So if you see this thing smash back into the previous support and test this resistance one more time, it's very likely that you break it. And we talked about the technical breakout target of that is just the double bottom, right? Double bottom neckline on top of the breakout, which would theoretically take you upwards to this new found resistance that is pretty technically confluent here, right? The fact that I just kind of did that on the whim is pretty funny. And it's funny that it lines up at 530 pretty much exactly. So that's your most bullish case scenario, I would say, is 530. Your most bearish case scenario is you see this rejection, you fill the gap, currently sitting at 330. And let's say you don't bounce. That would be your most bearish scenario. But I do think it's very likely here, as we wait for further news, that you fill the gap and you continue to trade here until GameStop gets its freaking run. And then you will see probably this, right? I think you'll get paid on the GME warrants, but we'll just have to wait and see, unfortunately. If you hold above the 9-day EMA, that will be very bullish, in my opinion. Fail to do it, and you fall into this scenario. So that is just what I'm watching on the GME warrants. You have the daily MACD cross about to happen, just like GME. So that is also what I'm waiting for and watching for on the warrants. On IWM, IWM still seeing insane price action, and we love to see it, right? Because this does help bode our bullish scenario for GME and AMC, is this bullish engulfing candlestick. Even though it's on low volume, you've remained bullish by holding the 9-day EMA, and it's very, very likely, in my opinion, looking at the 4-hour, now that you've kind of cleared this resistance, or at least I think you have. Yep. You've cleared the resistance. You've successfully retested it. It's very, very likely, in my opinion, that you now shoot for that juicy, tender loving $300 price target that we've had on this freaking thing since November of last year. $300 target since November of last year that we have been calling out on this channel. And it's all love. There's been a lot of bears, but it's all love. The technical price target from this breakout would be the full extension of this move, and that would take you to a pretty nice location, right? Come on. Come on. That takes you just shy of 315, and I think that would make a lot of sense depending on how you kind of make this megaphone pattern. Let's see. So if you take the tops, that really lines up very well with these two resistances. So that's what I'm going with until otherwise. If you break back into this channel, it's likely you come back and you have a failed breakout and you fill this gap that you have yet to fill, currently at 283.53. And that'll be history, right? You'll probably find some kind of support, whether it be the previous resistance channel like that, or whether it be this rising support that has really just propelled IWM to the freaking moon. And that's been our thesis on this channel, is that IWM, particularly the Russell 2000, right? IWM / SPY. It was that you will see, let's get rid of that. You will see IWM begin to outperform the S&P for the first time in a very long time, right? Since 2021, this was the last time you saw that happen. You saw a 43% variance between the SPY and the Russell. That is huge when you talk about the macro. You've now seen a macro break out of this falling wedge, and you're testing these more local timeframes. I'm assuming, right, if you see that breakout, you're going to see this thing freaking fly for the first time in a very long time. Hopefully we see small cap stocks perform well in that time frame. But I think that's all I got for the day, guys. So God bless each and every single one of you guys. Like I said in the beginning of the channel, please, if it would mean a lot to me, right? If you guys help me get to 1,800 subscribers, feels like a dream from where we started, but we're on the right track to 2K. God bless you and your family, and remember, traders, the best is yet to come. Much love and peace.